In 2022, we faced rising interest rates, tech layoffs, and CEOs stepping down along with macro red flags creating tension on a global scale. All of this has left many people wondering, are we heading into a recession? In this video, I'll be sharing my thoughts and reasonings for why I think things could get worse before they get any better. But first, I'll be recapping some of our highlights from the year at Cryptic Investing. Be sure to stay to the end for my thoughts on the current state of crypto and my outlook for 2023. What's up everyone, my name is Devin Boeing and I am the founder of Cryptic Investing, and we serve as your hub for investing, consulting, and education within Web3. Today we're back with a recap and outlook video to start off the new year. As we all know, 2022 was a year of uncertainty and global economic turmoil. Throughout this year, Cryptic Investing has resiliently been building the foundation of our business and growing relationships within our local communities and networks amid the current crypto downturn. As a hub for education, consulting, and investing, we focus on working with marginalized communities to ensure that they have the knowledge and resources to take advantage of the societal and financial revolution that's happening within Web3. To start off the year, we announced our partnership with youth-led organization Bridgemakers. Bridgemakers is working to amplify and mentor the leadership of young people to bridge America's toughest gaps. Bridgemakers were great partners with us for the first 6 months of the year as we worked with them to help us define our mission, vision, and goals of our organization. As the year went on, we had the opportunity to work with programs like ELOC, which is a program at the University of Minnesota which helps introduce underrepresented high school students to business classes, professional development skills, and career opportunities. We educated the students on Web3 technology and its application and asked them to imagine and analyze how Web3 technology could be integrated into a specific industry. The students came up with brilliant ideas from using Web3 to create new travel experiences to mental health reform. One last thing that I would like to highlight is our partnership with the City of St. Paul Public Library. This partnership allowed us to bring Web3 education directly to marginalized communities as we hosted our workshops in the Rondo Public Library in St. Paul. We plan to grow these partnerships and opportunities as we go into 2023 and continue to work with organizations and companies that align with our mission. I want to thank everyone that's been on this journey so far on behalf of the team and myself. Now here's our brief recap of some of the major events in 2022 and our outlook for 2023. The Web3 space has financially been in a downturn for the majority of 2022, with the big crash happening in May. We can start with the Terra Luna death spiral, which made this crash even more devastating. So let's flash back to April of 2022. At this time, Terra had one of the largest growing ecosystems in the bull run and was currently the 6th largest coin by market cap. Its ecosystem offered decentralized stablecoins and other financial services and applications. The Terra ecosystem was powered by Luna and ensured that Terra's stablecoins remained pegged to the fiat currency that it was backed by. Without making things too confusing, Terra used a burn and mint mechanism along with free market arbitrage to keep its peg at $1 for UST. Now in a bull market, maintaining this balance isn't much of an issue since there's so many traders and demand in the market. But once the crypto market started to lose confidence and Luna holders started to sell, there wasn't enough demand for the selling pressure. This led to UST losing its peg at $1 and entering what is known as a death spiral. What came after this was people unfortunately losing millions of dollars as the Terra ecosystem collapsed, wiping the faith and money of many investors. Now fast forward to November of 2022. At this point, the majority of people that started in the crypto bull run have left. And when you think things couldn't have gotten worse for crypto this year, FTX, one of the largest crypto exchanges, went bankrupt. FTX was one of the most trusted exchanges, gaining the trust of accredited investors and funds like BlackRock, top athletes such as Tom Brady and Steph Curry, the US government, and was even a partner with the World Economic Forum. This trust was destroyed when the public found out about leaked documents from a hedge fund owned by FTX called Alameda Research. Long story short, FTX was running its exchange like a bank, taking other people's deposited money and leveraging it to make more money. To make things worse, FTX was using their own token as collateral for the loans that they were taking out with other people's money. Once people found out about this, they started to withdraw their funds, which ultimately led to a bank run. FTX didn't have everyone's money, so they froze over $10 billion of assets on their exchange. This started the collapse of the massive FTX empire. I would say there are two major lessons to take from these disastrous events. Number one is to be cautious of stablecoins other than DAI, which is like the only one that has proven itself to work in a decentralized manner. This is not to say other stablecoins are not to be used, but be aware of the risk and always do your own research. Number two is to always store your crypto and digital assets on a cold storage hardware wallet, not on exchanges. This is the only way to have full ownership of your digital assets and to avoid ending up in situations where your money is halted on exchanges like FTX. Always remember, not your keys, not your crypto. It's also important to recognize that we've seen fiascos unfold like the FTX situation in the past, and unfortunately we'll continue to see them in the future unless there's decentralization and transparency of financial services. FTX becoming insolvent is an example of why there's a need for decentralization of financial services so that we can eliminate human greed and error. If you want to know more about decentralized finance, let me know in the comments and I'll be sure to make a video about that in the future. While this market downturn has rightfully turned away a lot of people from the Web3 space, I think a lot of people are also missing an opportunity of a lifetime by turning away now. Number one is that all markets follow cycles, so a market crash happening is only a matter of time. The crypto market follows the Bitcoin 4-year halving cycle. To simplify, this is when Bitcoin mining rewards are cut in half for miners, ultimately making mining harder. The Bitcoin halving usually aligns with the start of the next bull run, so we could expect the bull run to start in 2024. Aside from the Bitcoin halving, all markets move the way they do because of human emotions and psychology. This is a chart that I refer to often called the Wall Street cheat sheet, and it does a great job of putting this idea into perspective. It shows the various stages of market sentiment that most markets tend to follow. I use it to understand where we might be in a market cycle depending on the overall sentiment and attitude of investors, which ultimately allows me to better position myself in the market. When you zoom out and look at the 2017 bull run, you can see how similar these charts look. And when you look at the 2020 bull run, you could see how this is also panning out in a similar manner. None of this is by coincidence. If you look at where we're currently at in today's market, I would say that we're in the anger stage, especially with the devastating fall of FTX, leaving many people wondering, how did the government allow this to happen? We're entering a stage of max pain for investors, but I still think we're a few months away from entering the depression stage. Fundamentally, this chart shows that markets are emotionally driven. And if you want to succeed as an investor, you have to take your emotions out of investing and make rational decisions. There's so much more to my market analysis strategy, but I think this chart is fundamental to creating success in the crypto market. Number two is that as an investor, volatility creates the biggest opportunities, but also exposes you to the biggest amount of risk. But keeping the chart that I shared earlier in mind, you can decrease your risk by generally entering the market at times with greater upside potential. This is because when the market is very fearful, there's less euphoria and less people buying, which ultimately gives you a great buying opportunity. These points ultimately show how young the crypto market is. On the bright side of things, if you're watching this, you're honestly still early and there's gonna be multiple opportunities in the next 10 years to change your life. But this comes down to how much you're willing to learn in the bear market. While crypto is clearly in a bear market, development within the Web3 space has been in an uptrend. The long-awaited Ethereum merge happened successfully, and 36% of all verified smart contracts were deployed this year. This is a great sign because while we're still in a bear market, developers are continuing to build on the blockchain. We've also seen corporations like Starbucks and Reddit enter the Web3 space with their own strategies. Corporations entering the Web3 space is ultimately great for adoption as it brings more exposure to Web3 technology. The real adoption occurs when people are using Web3 technologies without even knowing. The fact that we're seeing so much growth in adoption while being in a bear market shows that Web3 is more than a financial narrative that many people tend to follow. In my opinion, this is just the beginning of Web3 adoption, and I ultimately think all businesses will need a Web3 strategy. The companies entering the Web3 space right now are realizing that having a Web3 strategy creates a competitive advantage, and those that don't adopt one will be left behind. Creating Web3 strategies for businesses is part of our services here at Cryptic Investing, so if you're looking to create a competitive advantage as a business, be sure to reach out. Unemployment rates have decreased since the pandemic. Major companies have been laying off and CEOs have been stepping down. Many people are wondering, are these signs of a recession? And ultimately, could things get worse? A big indicator that I look at are US Treasury yields on bonds. Bonds are basically coupons that represent a loan that you gave to the government. Treasury yields are the interest rate that the government pays you for borrowing your money for a certain period of time. Keep in mind that the yield changes based on the demand of the bond. The yield will decrease if there's high demand for bonds because the government is trying to make the bonds less attractive. There are different bond yields, but for today we'll be comparing the 10-year Treasury yield with the 3-month yield. This helps us create a long-term and short-term perspective of the market. In a healthy and confident market, the 10-year yield should offer a higher yield than the 3-month yield. This is because you're loaning your money for a longer period, which technically means you're taking more risk. But on October 27th of 2022, the 3-month Treasury yield surpassed the yield of the 10-year Treasury yield, which is known as an inversion. This is very important because these yield curves inverting has been followed by a recession every time except for in 2019, which was probably prevented by the amount of money that was put into the economy to keep it afloat during the pandemic. So I can safely say that we're heading into a recession that could last for the next 12 to 18 months at least. So what could a recession look like? Well, we could see more job cuts because businesses cut back on production and labor costs. The cost of living will increase due to inflation. We'll also see higher interest rates from the Fed to reduce inflation and slow down consumer spending. These are things that we're currently already facing, but we could see it worsening over the next year or so. Generally, I think the worst is yet to come for all markets. As for the crypto market specifically, I believe we'll be in a long consolidation period. I don't think there'll be a catalyst strong enough to take us into a bull market this year, with everything unfolding on a macro level and within the crypto space. If anything, we'll see another major drop before we consolidate for the rest of the year. This will be a great time to dollar cost average and when I will personally be making a lot of my investments. Keep in mind that the market has to emotionally exhaust investors and make people lose interest and belief in the crypto market. We won't see a bull market until then. The majority of my outlook thesis stems from understanding market cycles, especially the Bitcoin 4-year cycle. If you take the time to understand market cycles and how they relate to human emotion, you'll understand that market cycles don't always repeat, but they often rhyme. To learn more about us and our consulting services, be sure to check out the links in our bio or visit our website at crypticinvesting.org. Like always, none of this is financial advice, but if you enjoyed the content, be sure to leave a like and follow.